Bailey Lipschultz joins us right now. He's going to help walk us through the closing bells. He covers equities for us here at Bloomberg. And one thing that jumped out at me, 55.63, that was where the market opened today. That was the low of the day. The high of the day is right now where we speak. So wire to wire, this has been more or less an uptick from the first minute.
And really needed, though. Yeah. When you look at how we had been trading this week and even over the last few weeks from that February 19th high, Mag 7 falling out of favor, so much uncertainty about who is going to be buying the dip, whether you want to rotate into an Apple or an NVIDIA, and we've seen a lot of big tech leading us higher today.
Yeah, and big tech is out front, only marginally, but certainly noticeable on the day. The NASDAQ indices each, whether it's the composite or the 100, both up about 2.5% on the day, more than 400 points. Of course, on a weekly basis, they are still in the red, down about 2%. Similar story for the rest of the indices as well. The S&P 500 is going to finish the day higher by about 117 points, or about 2.1%, though on the week it is down 2.2%. The Dow Jones Industrial Average up more than 600 points on the day, or about 1.6%. They're going to finish the day down. The week, down by about 3%. And the Russell 2000, that's your relative outperformer. It's up 2.5% on the day. It's down 1.5% on the week, but based on the other moves in the other major indices, that is outperformance.
There are only like 48 stocks that aren't up within the S&P. So definitely an outsized rally pretty much across the board. Even the Dow transports are up by almost 2%.
On a sector basis, all 11 of the S&P sectors are finishing out the day in the green, led by tech, led by energy, and led by financials. And I have to do the glass half
Please.
Empty thing. On a weekly basis, only two of the sectors are in the green, and that would be energy and utilities, everything else in the red, with the biggest declines coming from discretionary and staples.
Yep, which raises the question, of course, is this sort of the washout and we can reset, or was this just a sell-off based on the fact that we were very overbought to begin with? And those have different implications, of course, for when you buy sustainably the dip. Bailey Lipschultz, kind enough to join us. He's a Bloomberg Senior Cross-Asset reporter, and he joins us now. All right, winners, gainers, losers, what do we got?
The best performers, maybe not the best performers in the S&P 500, but when you look at some of the big rallies we saw, Mag 7, NVIDIA up more than 5%, so much excitement around their AI event next week. Jensen is going to be giving a speech that really could kind of drive the market in kind of a dearth of earnings and maybe a lack of Fed speak. We also saw Apple rallying, probably a bit of short covering. I like to credit Ted Lasso. I'm a big fan of Ted Lasso coming back for a fourth season.
Okay, but is this going to go on too long? Like, is it one of those things where like they should have ended it?
I hope not. I mean, you can't.
You know what I'm saying?
You're putting bad vibes out there, Alex.
I'm sorry. It's true.
We're talking about gainers.
But it is a
Apple
girl
was
team,
up.
so I am super pumped about that.
See, it's a big. Did you watch Romaine? I feel like
I did not, but we are watching. What's the other one? Severance. It's on Apple.
Severance is also good.
So yeah.
No, they're different.
So,
but yeah, Ted Lasso makes you feel really good inside. I don't think Severance does that.
Okay.
Actually, kind of the opposite. But also another outperformer, Ulta stock rallying. What was that? 14%. This coming after beating expectations. Profit CEO talking about the lower risks of exports or imports. Import
Why
exposure.
were people discounting this stock? I mean, I understand. They had a couple of quarters or things, but as Alex always points out, I mean, there's some things that are recession-proof.
Invest in your face.
The only thing, though, you're still down 37% on a trailing 12-month basis. So even after a 13% pop, you're really just recouping some of those losses. So maybe you do have some of that discretionary spending, but at the end of the day, if you're weighing whether you want to pay premium for Ulta or shifting over and buying some discount goods, I don't know. Alex, I don't invest in my face, unfortunately.
What?
So,
well, you're still young. Believe me, you'll get to a point where you don't want to age gracefully.
It also feels, though, that all the retailers are getting hit by the same idea, right? So if things are less bad than maybe was out there, like that's enough for that kind of pop in a stock.
Well, the interesting thing to that point, it feels like we saw companies that were beaten down, low expectations, short covering, intraday pop. When then we saw a number of tech companies coming out and beating, but talking down forward guidance. And then you saw some of those big losses. But we're in such an uncertain environment that I don't think anyone knows. I
am curious, though, about some of the names that declined. I mean, on a day, we did see a lot of the retailers in the red. On the week, certainly, a lot of those retailers in the red. A lot of consumer discretionary names. And I'm curious as to what jumped out at you in that space.
If we're looking at some of the laggards, one that stands out, maybe not in discretionary, particularly, but Abbott Labs, this is a company, medical devices, but they do also sell infant formula. So they were one of the biggest laggards among some of those larger cap companies. Them along with Reckitt, this coming after a judge ordered a new infant formula trial. So there's been some uncertainty around that, and obviously when you are dealing with potential lawsuits and what that could mean and some of those indecisions, that's really when you see some of these stocks lagging. But again, Abbott is really more well known for medical devices, a group that, broadly speaking, had been kind of seen as a safer haven given all the volatility. If you look at it on a 12-month chart, it actually was ripping just as all the broader markets were pulling back. So closing at 126 and change, but really was at the beginning of the year trading closer to, call it 113. So still trading in the green on a year-to-date basis.
Yeah.
Here's a stock. Sorry, go ahead.
Yeah, go ahead.
Stock Exponential Fitness, down 38%. Never heard of this company, but apparently it owns like recreation centers, like boutique things where you do Pilates and stretching and cycling and all that kind of stuff.
The bougie gyms.
Yeah, are they out of favor now?
Out of favor. Well, weak outlook. I guess it comes back to kind of the K-shaped recovery, but missing expectations and kind of walking the street lower than maybe they were looking.
But this is a huge drop. I mean, we're talking about its worst drop ever. It's at a record low. And I guess the question is, I mean, I would think that their type of clientele, you know, are like, you know, the Alex Steeles of the world who are insulated from economic conditions because, you know, they're always going to, you know, make sure that they go out and get their, what is it, boutique fitness?
Yeah, it's an East Coast elite thing.
Okay.
I don't actually belong to this, just to
then
point it out.
Then she leaves and drinks our Olipop and, you know.
Yes, but I think to your point, high-end consumers, are they actually more recession-proof than we think? It also seems like the surprised analysts that they knew that there were issues, but maybe not to the depth of the issues that they saw. And it's also about upgrading infrastructure and processes, so a little bit more marketing on that side rather than just a drop-off in demand.
Yeah, and then also another loser for the day, Li Auto, EV company, forecasting revenue and vehicle deliveries for first quarter well below what Wall Street was looking for. We saw XPeng, one of their competitors, also under pressure. Still feels like a very uncertain backdrop for electric vehicles. Obviously, Tesla has any number of headwinds, Musk-driven and otherwise, but there's just so much of a conversation around how expensive some of these can cost, and actually if there's demand to follow through, not only for the higher sticker price, but also just for the EV product as a whole.
All right, I want to take a quick look at yields because this is obviously going to be a big part of the story next week with the big Fed meeting. On the day, we did see some movement there. Yields did move higher across the board, up about 6 basis points on the shorter end of the curve, about 4 basis points on the longer end of the curve. We should point out, though, on a weekly basis, they basically went nowhere. I mean, they are higher on a weekly basis, but we're talking about 1 to 2 basis points. So despite all the volatility that we had in between, you know, if you had just, you know, went to sleep on last Friday and woken up right now, you would think nothing had really happened.
I could definitely do that, by the way.